If you're an investor looking in from the outside, especially the younger generation of investors, millennials, Gen Z, who are more involved with their investment decisions, you look at that and say, okay, if gold's at 4,200 and I think the next 10 years is going to average out at 3,100, which is the highest I've seen from one of the banks in Canada, why would I invest in this space? If I were to bet on one going higher and the other one correcting, it would be gold and gold equities going higher and the broader market correcting.
What about your outlook for the gold price in 2026? I'm joined today by Keyvan Salehi. He's the president and CEO of STLLR Gold. Now, the gold market has been on fire, but the mining sector has been slow to catch up. We're going to find out why, what's next for both mining and gold. Welcome to the show, Keyvan. Good to see you.
Hi, David. Thanks for having me. Great to be here.
What was the one thing that surprised you the most about this massive run-up from gold's $2,000 price 18 months ago to $4,200 today?
To be honest, I'm not surprised at all with this move. It's a move that's been a long time coming, and myself included, with a lot of other people, have been calling for gold 5,000, which at $4,200 gold today, we're about 20% off of that mark. All the reasons that we've been talking about why gold should go to 5,000 have been there, and they still remain intact. So I think investors are going to see 5,000 gold before the end of next year. Things like geopolitical risk, inflation, and most important of all, rising debt levels, not just in the US, but also global debt system. I think that's just out of control. And I think gold is the only and the best hedge against all those risks. So I'm not surprised at all with that move. I think this is just the beginning. We are coming out of a decade-long bear market for gold and gold miners. And I think it's just the beginning. And there's a couple of positive signs that I see in the market right now. For the first time in a long time, the general investors are actually taking notice. And I think they've fueled some of the rotation back into gold and gold equities. And I think that's going to continue as well.
So when you say that the bull market's going to continue, I think the first question that I have on my mind, and some others as well, is how do you know this time is not the same as prior cycles? In other words, why is this time different? Let's take a look at what happened in prior cycles. 1980, gold peaked, and we had a double top, fell, stayed flat for basically 14 years. No, 20-something years. Yeah, it was a 20-year low. And then finally, gold started showing signs of life. It was a multi-year, almost 10-year slow rally, not a fast, monumental parabolic rise like we're seeing now, up until 2011, when gold, again, had a double top, fell by the order of 30, 40%, stayed flat for about 10 years. Same thing happened in 2020, although 2020, I'd say, was probably the beginning, in retrospect, the beginning innings of this bull market. And I remember back then, 5 years ago, people were saying the same thing. Well, this bull market is going to, is just getting started. We're going to see a lot higher prices. They turned out to be correct. But if history were any guide, it's been pretty consistent. Gold tends to have shown a double top somewhere. We haven't seen that yet. But if it falls, goes up, we can see a correction by the order of 30, 40%, and then stay flat for another decade. Yeah. Why is this time any different?
That's a fair point. I mean, the last decade, like I said, we've been in a decade-long recession for gold and miners as well. We've had a couple of attempts, I think in 2016 and maybe 20, where the metal tried to break out, and that was obviously not successful. But what I would say is, if you look at the bear market that we're just coming out of, and the gold and the miners, we've also had a more than a decade-long, the craziest bull run that we've seen in the broader market, like tech, NASDAQ, S&P 500, since the financial crisis. And although we've had a couple of hiccups along the way, for the most part, it's been a V-shaped recovery. I mean, within 3 to 6 months of any 15, 20% correction within those major indices, we've seen all-time highs. And I think that cycle is about to break. This is something that gets discussed, and I know you've had guests on your show that talk about that. It just cannot continue. That's my personal belief, and I believe that's the major catalyst. It's not a question of if, but when. We haven't seen a prolonged, David, sustained correction in the broader market. And the latest run is essentially being, on the back of, the hype with AI. And I think that bubble at some point will burst. And when that happens, I think that's the event that's going to be the major catalyst for why gold is going to have a bigger breakout. And that's going to essentially, cause mining stocks, gold securities to go even higher, because that's when we're going to get a real rotation into mining stocks. We haven't really seen that. We're just getting a small bit of that in terms of rotation from general investors and retail, some of the younger generation of investors, millennials, Gen Z. But for the most part, they haven't really seen a bull market in terms of gold and mining commodities. So I think that's going to be the major catalyst for why I think gold's got a lot more room to run.
Can we compare this cycle to 2011? What's different? What's similar in terms of investor sentiment and mining activity?
Well, look, in terms of demand, we talked about some of the reasons why the demand for gold is going up. China, Russia, central banks continue to buy gold. And more importantly, coming out of a 10-year bear cycle in gold and mining companies, we haven't seen a lot of investment. So I think supply side is going to have a hard time catching up. It's not like you can turn on the tap and start producing a lot of gold to meet that demand. We're looking at anywhere from 15 to 20 years from discovery all the way to construction, eventually production of mines. So that supply chain is also going to be limited. But again, like I said, the rising debt levels and the fact that that's going to have a huge impact on fiat currencies and devalue them is why I believe gold has a lot more room to run. In addition to the fact that I think we are at close to top of the market in the broader markets like NASDAQ, S&P 500.
What about your outlook for the gold price in 2026?
Well, look, like I said, I mean, myself included, with a lot of other people, we've been calling for gold 5,000. It's taken quite a bit of time to get here. Timing is, you can't always time these things. But I think within 20% of that move, I think investors are going to see gold 5,000 before the end of next year.
$5,000. I remember when I first started in the industry a couple of years ago, and people were calling for $5,000 gold. And back then they were labeled crazy. Now it's less than 25% from current levels.
Yeah.
So it's
taking a bit of time to get here. Like I said, you can't time these things. It's a lot of it, and I keep saying this, and I maybe at the risk of sounding a bit repetitious, a lot of it comes down to capital allocation, the fact that we've had this insane run in the broader market, tech, cryptocurrencies, and these are some of the things that mining stocks and gold in general have to compete with in terms of capital allocation, right? And I think we are now finally at an inflection point where past AI and this AI boom, I don't see anything else. I'm not hearing anything else, and happy to hear other ideas or thoughts as to what can keep the broader markets going even higher. But again, as an investor, if I were to bet on one correcting and the other one between two assets, gold and the broader market, I would be betting on gold here. Again, the reasons why a lot of people have been calling for gold 5,000 for the past decade or so, they still remain intact. The rising debt levels in the U.S., the long-term outlook for U.S. currency, I think all those reasons still remain intact, and nothing has changed this year. And the other thing, I'll point this out too as well. Look at the 2025. We've had an all-time high in the price of gold, and we've also had the broader market, the major indices in the U.S. make all-time highs as well in S&P 500 and NASDAQ, right? So that's a bit of an anomaly. I mean, that's something that it's a bit it's unusual looking at the history of the way the two asset classes have traded in the past, and I think there's going to be a divergence. And again, it goes back to my point originally as an investor, which one are you betting on going forward?
I like to compare my guess forecast to large banks. So JP Morgan, I believe, is, from what I found, the most bullish bank on gold. There may be others, but I think from the big banks, their bulge brackets, they're one of the more bullish ones. They originally, in the summertime, projected $4,000 by 2026. And the fundamental rationale hasn't changed, but they've obviously since updated and upgraded their forecast because the gold price has blown way past $4,000 before 2026. And now they're saying $5,000, $5,055 an ounce, very specific, by fourth quarter 2026. So that's exactly in line with what you're saying. Gold remains our highest conviction long for the year. And we see further upside as the market enters a Fed rate cut cycle, said their head of global commodity strategy. That's a pretty bold statement, their highest long conviction. Now, they're attributing this to the combination of Fed cutting, stagflation anxiety, concerns about Fed independence. That's a big one, right? Because we don't know if, let's say, Kevin Hassett, who Trump wants to appoint to the Fed, is going to be basically just an extension of the White House, and broader debasement hedging. On the dollar, she said that it's not a de-dollarization story, it's a debasement story. People are moving away from the dollar, diversifying. And then furthermore, she said $6,000 by 2028. So she's even more bullish than you long term, this analyst. So,
well, look, I'll tell you this, David, that's great to see. I love hearing that. I think we need more voices like that are more realistic. Contrary to that, if you look at some of the big banks in Canada, and they put out their long-term price projections for gold all the time, historically, and you can go back as 20 years back, and if you look at the spot price of gold and the long-term projections for price of gold that the big major banks in Canada anyways put out, it's always anywhere from 20 to 40% below the long-term, below the spot price. And I think that's been a challenge for us as well. So if you're an investor looking in from the outside, especially the younger generation of investors, millennials, Gen Z, who are more involved with their investment decisions, and they're now in the workforce, they're making decisions, and as to where money is going to be allocated to. You look at that and say, okay, if gold's at 4,200, and I think the next 10 years is going to average out at 3,100, which is the highest I've seen from one of the banks in Canada. Why would I invest in this space? And that's been a challenge. And historically, that's been the trend. All the long-term price projections in Canada anyways, with the big banks, has always been super conservative in relation to the spot price. And that's something that, I'm not sure, I don't have a solution for it. I don't think we're going to solve that problem today, but that's a challenge that we as an industry have to overcome. And I think it comes down to education, being more promotional about the products that we pull out of the ground, marketing, advertising, and just raising awareness about what we do, the products that we pull out of the ground, and essentially branding. That's something that the industry is essentially faced with every day. As an investor, if you look at that and say, well, gold's at 4,200, the banks are telling me that it's going to go down, it's going to be at 3,100 over the next 10 years. Why would I invest in this space? That's something that we're going to have to overcome as an industry.
Why do you think these analysts at banks are more conservative with their outlook?
If I'm being fully frank with you, I don't have an answer to that. We talked about this at the top of the show. We've had a few, it's been a cyclical industry. So in the past, you would have, from peak to trough, you would have 3 to 4 years, or peak to peak, you would have anywhere from 7 to 8 years. That's what I learned coming out of University of Toronto, learning mining engineering, that it was a cyclical industry. But as we discussed again earlier, we haven't really seen that. So for the past, 12, 13 years, gold and gold securities have been in a bear market. With the exception of the last couple of years, we've had a nice run from 2000 to 4000. But so again, that could be the reason why they're conservative, but I couldn't really comment on that. I'm sure they have their own formula and how they come up with some of these calculations. But the challenge is that it's always been conservative. It's not like it's been, well, like one year I'm going to be more aggressive and 1 year I'm going to be more conservative. It's always been in the 25 to 35, 40% range conservative in relation to where the spot price for the metal is.
You mentioned the debt issue, the global debt issue. So global debt surpassed 300 trillion, and just in the US is 38 trillion, which is like 10% of global debt. When you think about it, it's crazy for one country. Yeah. But anyway, at what point does this become unsustainable, Keyvan? And why do metals and hard assets fit into this picture?
Well, I think look, my personal view is that it's unsustainable now. And I think a lot of people that have been calling for gold 5,000 or even 6,000 would make the same argument. So I don't really have an answer to that, David. My view is that it's unsustainable now. And having again, gold being a perfect hedge against some of the risks that we're seeing here, right? Like, so fiat currencies, whether it's U.S. currency or some of the other currencies, I think, I think short answer to your question is that it's already in an untenable situation.
Tell us about why people around the world need gold. I mean, I'm not just talking about investors who speculate in gold in North America. I'm talking about people in China who perhaps are buying gold for investment reasons. People in India may be buying gold for jewelry. People in the Middle East, Turkey, for example, having had a history of buying gold when the currency has depreciated significantly. And all around the world, same story. Tell us about some different use cases that you've observed.
Well, look, that's a great point. More than close to 45 to 55% of gold that's produced goes towards jewelry. And yes, some of that is commercial and luxury goods and all those other things. But for the most part, you and I and North America and the West, we're comfortable with the currencies that we have to live with because they're more stable. But when you look at higher risk jurisdictions like Turkey, you look at India, gold has always been a hedge against a very highly volatile and risky currency, regional currencies, if you will, right? And this is why a lot of people buy, like for example, when you talk about India, a lot of people buy gold and jewelry because it's not just because they want to buy luxury goods. It's actually a hedge against some of the volatility in their own regional currencies. And I think that's going to continue as well. Again, going back and echoing some of the things that we've talked about in terms of, devaluation of fiat currencies and rising debt levels and so forth.
Well, let's talk about the mining sector. So there's about more than 1,000 junior companies on the TSX, I believe. It's a lot. And I know for a fact not all of them are legitimate projects. How do we differentiate between the good ones versus the not so good ones, and then the fairly valued ones versus, you were talking about valuations before? How do we know if something is fairly valued or completely overvalued?
Well, I think for the most part, like I said before, I think the entire space, even from large caps all the way to juniors, small caps, companies like Stellar are still grossly undervalued, especially in relation to the movement of the price of gold that we've had over the last couple of years. To your point, a lot of those companies that are listed on the TSX and TSXV, and perhaps even indices abroad, they're just shell companies, and they don't even have projects in their portfolio. So that's something I think that's an area where we need help from regulators in terms of, okay, why are these companies listed? Why are these companies listed? And why are they promoting themselves as mining companies when they don't even have a project? Well, ultimately, it just comes down to, as I said before, marketing, raising awareness, and that's incumbent on us as issuers and junior mining company stocks, and even the majors as well, as to who we are, what our projects are, and what they're capable of doing. We talked about the supply side of the equation. If you believe the demand for gold and the physical is going to be there over the next, decade or so, scarcity of supply is also going to be there. There's not a lot of large scale, meaningful projects that are in the pipeline globally. And our company, for example, is Stellar. I'll give you this example. We have close to 17 million ounces in the ground, David. We trade at 220 million market cap, Canadian dollar terms today. And if you were to start a company today and build that portfolio of assets, it will take 10 years and north of 2 billion to assemble those ounces in the ground. And I think that's the value proposition for companies like us. And I think and it goes back to my earlier point about the fact that I think there's a bigger re-rating and repricing of gold and subsequently mining stocks and gold mining stocks in general. And we haven't really seen that rotation yet.
Stellar in itself, tell us about, just give us a rundown, elevator pitch, project, deposit, where you're located, pros and cons, the jurisdiction, and what are we looking at in terms of size and grade?
Sure. So look, quick background context to the Stellar story. We are a new company. We formed this company back in early 2024, but it's the result of merging two previously long-dated junior mining stocks on the Toronto Stock Exchange, Nighthawk and Moneta. And both these projects have been around for more than a decade. We have two multi-million ounce, large-scale development gold development projects in Canada, one in Northwest Territories and one in Ontario in Timmins mining jurisdiction. Both projects are easily capable of doing, 300,000 ounce a year production profile, and they have long mine lives as well. In addition to that, we have another old legacy site called Hollinger, which is an old tailings project right in the city of Timmins. And we just actually put a resource out on this project. Currently has about 500,000 ounces of gold, most of which is in the indicated category, and readily available for extraction, given that there's a lot of excess mill capacity in the area. Right now, at today's price, there's north of $1 billion of free cash sitting in that tailings pond. And we think that with the work that we've done and as we advance the project towards permits under the new mining regime and the laws, the rules that allow these projects to get permitted faster, we see a lot of opportunity for that as well. But projects have been around for a long time, great projects. The company's new, and the merger of the two companies really was in response to going into 2023. It was the worst market that I'd seen, and there was a lot of talk about consolidation. It goes back to your point about having 1,300 companies on the Toronto Stock Exchange, and all the costs, the corporate G&A costs that is required to maintain and carry these corporations. That was in response to the consolidation, and the merger of the two companies was in response to a really difficult market in 2023.
What are you doing now that gold is $4,200 versus what would you have been doing if gold were $2,000? 2000, yeah, 2000, 1800 from before this rally.
Yeah, look, great question. We are a small cap name. We obviously spend shareholder money and depends on how the markets are, how much capital we can raise. We're fortunate that we have a solid shareholder base, and we've been lucky to have had a supportive group of shareholders that have been there with us for the past 4 or 5 years. It's really a question of capital allocation in relation to how much money you can raise and fiscally in a prudent way, allocating that capital in a fiscally responsible way. For us right now, given where we are at 4,200, we're full throttle on advancing our core assets, which is the Timmins portfolio. That would be the Tower Gold project in Timmins and also the Hollinger project. So we've already started advancing those projects towards permits. We're doing all the technical work, all the studies that are required to essentially get these projects towards FID in the next 2 or 3 years. And if we see a bigger re-rating of our stock and there's more capital available, or we're more than happy to turn the tap on and advance our projects in Northwest Territories as well. Given that we have 3 projects and our flagship is the Timmins portfolio, we'll also look at different strategies in terms of monetizing and leveraging the non-core assets to further advance our core assets with minimal dilution for our shareholders.
Keyvan, good talk. Best of luck for the development of your company. Give us 1 or 2 milestones that we should be watching for.
Like I said, next year we started the advancement of the project in Timmins, Tower and Hollinger. So there will be lots of news and catalysts along the way in the next 12 months in terms of how far we get with the baseline environmental work that we have to do and engaging with our First Nations and the local communities and so forth. We are at the PEA stage, so we're advancing that towards PFS over the next 12 to 24 months. So there will be announcements on that. And we're also going to start drilling our main project, Tower Gold in Timmins, starting in January. So there'll be lots of news release on that as well. And look, some of the other stuff, as I said before, in terms of looking at alternative strategies, those are things that we are working on internally, but I can't really comment on those, obviously.
Perfect. Appreciate your time, Keyvan, and we will catch up with you again soon. Where can we find your information about you or your company in the meantime?
Best place to visit us is obviously stellargold.com. We are active on social media, so you can follow our channels. We are heavily engaged with social media. I myself was engaged and I stopped, and I'm going to start that again as well. So look for my own personal socials going forward and starting in 2026. And yeah, I'll leave it there.
Good. Thank you very much. Appreciate it. We'll put the links down. We'll put the links down below, so make sure to follow Stellar Gold there. Keyvan, we'll see you next time. Take care for now.
Thanks, David.
And thank you for watching. Don't forget to like, subscribe, follow Stellar Gold. Links down below.